The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Monday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN, 9 a.m. Eastern Time. We got about a half hour to go until the start of trading, and you have markets slipping slightly back from where we were in terms of we had quite the higher territory going on. Market gives up about 40 S&P points from the time of about 6 a.m. this morning, make it 45 almost exactly, from 5:45 a.m. this morning till 8 a.m., between about 2-hour period, 6 till 8 a.m., it gives all that gain up it had. We're still positive by 16 points right now, but markets were dramatically higher. NASDAQ 100, talk about a pullback, man. Let's zoom in on the action. 6 a.m. this morning, you're at 13,440. Just like that, you trade down more than 200 points. Right now, you're negative 15 points on the session. Dow still holding on to gains. We're up by 222 points, 33,035. You were a couple hundred points higher in the Dow, and the Russell up by 7 points as well. Bitcoin up $560, right near 39,000. Crude backing off from last week's gains, down $4.45. We're still above $100 at 104.82, down from 130. And that was last Sunday night. Think about the volatility we had last week. Gold continuing the decline from its highs last week as well. We make a high last week of 2,078. This morning, we're down another $18 on gold at 1966, and we jump to notes and bonds. You talk about a trend, man. We got yields pushing 2.08%, folks, today. 2.08%. Talk about a bounce, man. 2.08%. We bounced to 129.15, and just like that, folks, 4 points in a week. 4 full points in a week. You're talking about yields rising almost 0.4%, folks. We were sitting at about 1.7%. About a week ago, Sunday night, when futures spiked to lows. Last Sunday night, this is about 8 days ago. Again, 4 full points, 0.4 of a percentage point added to the 10-year yield in the span of 7 days. Now, we jump over to the VIX before we start with the headlines. Volatility index this morning, pretty sustained elevated levels right now. We're still sitting above 31. Been quite the sustained level indeed. I mean, we haven't seen a level below 20 since early January. Is that right? We did get a number below 20 actually on February 9th. Quite a little pullback from our first spike earlier in the year. But yeah, nothing really under 20. We're pushing the middle of March, folks. In a couple months, we've been sitting above that level, but the market warrants it with the type of volatility we're getting. Okay, we jump over to the headlines of the morning, and let's kick it off with the Fed to start rate hikes with license to turn aggressive later. That's what the market is telling them. 25 basis points seems all but certain that will come down the line on Wednesday. Federal Reserve will this week begin a multi-month campaign to conquer inflation. That's how they put it. Now, the market right now, okay, futures market showing about 165 basis points of tightening this year. That's between 6 and 7 hikes. Between 6 and 7 hikes. They're coming, folks, and they're not going to stop. CPI through the roof last week, right? Guess what? It's going up next month, folks, especially the headline number when you factor in the gas prices alone that we're going to be paying. We're going to see some CPI numbers on a headline basis that are going to be staggering, to put it lightly. With that in mind, the Fed is not going to be pulling back unless something very unfortunate were to happen with the market, maybe with some geopolitical risk. We'll get into that in a moment. China really trading down pretty negative this morning on some geopolitical risk persisting. But yes, that is one to watch. Be interesting to see what Chairman Powell has to say on Wednesday. I imagine he's going to say they will stay the course. They'll be data dependent. They will be hiking. The economy as of now is strong enough to handle this. But guess what? If things change, they will listen to the data. That's what he'll say. But the plan is set, and the market is dictating part of that plan when you're pricing in 165 basis points of tightening this year. That is quite a tightening indeed. Okay, we jump over to one of the other big stories this morning. China. Man, you talk about a rout going on in China right now. The Hang Seng Enterprise Index down 7.2% on Monday. Chinese stocks listed in Hong Kong had their worst day since the global financial crisis. And these stocks have been beaten down, man, recently. Hang Seng Tech Index, how about 11%? That'd be like the NASDAQ 100 going down 11%, folks, all right? The Tech Index, worst decline since it was launched in July July of 2020. It's wiped out $2.1 trillion in value since a year earlier peak. That's real wealth that was sitting in somebody's account, $2.1 trillion. Now, the broad route follows a report citing U.S. officials that Russia has asked China for military assistance in its war in Ukraine. It all ties back right now to geopolitical risk, as is the case with the market, even as we come into the Fed starting to hike for 6 or 7 straight meetings this year. Even as China denied the report, traders worry that Beijing's potential overture toward Vladimir Putin could bring a global backlash against Chinese firms, even sanctions. Sentiment was also hurt by a COVID-induced lockdown in the southern city of Shenzhen, a key tech hub in the northern province. Now, we jump to that headline because this is quite a headline indeed. Talk about a double whammy. China locks down Shenzhen, province of 24 million. First provincial lockdown since Hubei. Is that right? Sealed in 2020. Yeah, guess what? The iPhone maker Foxconn, it's halted its Shenzhen operations. Okay, so this could reverberate. I was talking about it on my show a little while back. China's zero. Yeah, you got Apple down $3 now. What's interesting is Apple's really turned with the market here, as the market has turned. Okay, but you got a $3 drop in Apple, man. That's a 2% drop in Apple. The NASDAQ 100 is basically flat. Apple's down 2%. They weren't down last night when this news was out there, which I thought was interesting. You have, a city or province of 24 million shutting down. You have Foxconn plant there that does produce products for Apple. They are stopping production. Can't do it when you're in lockdown. Apple's down $3. Is that going to hurt Apple earnings? Is that going to reverberate throughout the market? Small ripples can turn into big waves, man. But when you see China locking down 24 million in there. Now, to get back to the geopolitical start of things, angle of things, and the panic selling, and talking about the report from U.S. officials that Russia has asked China for military assistance, none of us know what's going to happen on a geopolitical spectrum, folks. Even the greatest military analysts out there are probably struggling, right, to figure out all the possible paths that this war could take with Russia and the Ukraine and then China. My take is I don't see China stacking on and taking on the brunt that Russia is. Yes, they may be two peas in the same pod, but there's just no reason to do that, in my opinion. We'll see. This is just a very uninformed geopolitical opinion. But that, I don't think, is in the best interest of China getting what they want in the long run, and that's what China is concerned about. They don't have to take all the heat for Russia right now, even if they want to throw them shade continually by providing military assistance, considering how the world has reacted. My guess is they will spin things in a different light and not bring the hammer down upon themselves, even if they would love to side with Russia to give themselves a little bit of political cover should they ever want to go into Taiwan in the future, as we all know is out there as well. But, man, that index, China, you look at some of those stocks, man, it's been very tempting to try and find a bid in these stocks, folks, and I would be careful. I mean, Baba, look at these gaps. Baba is down 20% from the close of Wednesday. 20% since the close of Wednesday. You thought you were getting bargain down at 100. Nope, you just lost 20% in the span of about 3 or 4 trading days. I'll pull up some other ones. Stay close. NASDAQ 100 flat. S&P's up by 20. We'll be right back.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Welcome back, folks. We got all the markets back in positive territory right now. You're looking at an S&P up by 20 points at 42.14 right now. NASDAQ 100 back in the green by 5 at 13,294. Crude continuing a little bit of a slide right now. You're down almost $5 at 104.42 in crude. Checking out the crude acceleration. Fibonacci-wise, you're talking about a retracement coming right into that 382 right now, and that is the full run you had from $62 and change just in December. I almost wanted to say September. Quite a run, man. $62 in December. And by March, you hit 130. We've backed off right to that 302. We're coming into that huge bar we had from the beginning of March when things really started to escalate. We'll see how crude reacts today. And gold, off about $19 right now for gold. You take a look at gold, going back to the run that began January 28th for gold. And pretty similar action, right? Coming right into that 382 area for gold. You trade on a price level of 1775 up to 2078. You're back to 1964 for the gold contract. I'm going to take that shorter term time frame one off. I'm going to back out here to see the Fibonacci I have on a longer term basis. You look where we were. You chopped around to the 618 once, twice. The 382 was a little bit of an upper boundary there for a period of time, and then we accelerate almost right to the highs. I think we made it to 2078. Yes, we did, within about $11 of the highs we had back in August of 2020. All right, let's jump around to some of the FANG stocks. We kicked it off. Apple's trading lower, dealing with some possible supply chain disruptions in Shenzhen and as Foxconn halts productions over there. We jump over to Microsoft shares this morning. Microsoft up about $2 right now to 282.20 for Microsoft. We jump to Google shares. Basically flat at 26.12 this morning. Facebook shares trading down another $1 at 186. We jump to Tesla shares. Elon down to 783 from about 795 last week. And let's jump around to some of the other stories. To finish it up with China real quick in terms of Shenzhen and the lockdown going on over there. Let me pull it up again. I was skimming this as we follow through. Yeah, they're talking about revisions here. I just had some more. Excuse me, there we go. I was in the wrong story in terms of China selling. So they only had about 3,600 cases, I think this is. Let me get the exact number. China, I mean, they really locked things down in pretty dramatic fashion pretty quickly. There it is. 3,400 cases nationwide is their new virus cases doubled nationwide at 3,400. So the way it happens is all bus and subway systems are shut down. Businesses, except those providing essential services, have been closed. Employees told to work from home if they can. Residents barred from leaving the city, which is home to headquarters of Huawei. Tencent Holdings, as well as China's busiest ports, except in limited situations. Apple supplier Foxconn halting operations at its Shenzhen sites, one of which makes iPhones. That has to have an impact. I saw that headline hit last night, pulled up Apple, very surprised that Apple had not traded lower immediately on that headline. And sure enough, you're down 2% already this morning for Apple shares. And folks, 2%, you're talking about a number, but you're down $3. Apple's got 16 billion shares. You're talking about close to 30 billion, $40 billion in market cap wiped out. Province of 24 million people is that province. So quite a province indeed. All right, let's jump around to what else we have going on here. Let's see, China we talked about, of course, and let's just jump down to some of the stocks that are moving. Now, we talked about China, but let's pull up some of these equities because I talked about it, man. Now, they talk because the China deal is pretty interesting, folks, okay? Now, they talk about, in this panic selling, the China bulls. The historic slide in tech selling is baffling China bulls. Yeah, I'd say so. Can't find a bid. I just said, some of these stocks down 20% from last Wednesday. The number of which had grown this year, as strategists bet on a rebound thanks to policy easing by the People's Bank of China. Goldman Sachs toned down their optimism slightly, slashing their valuation estimates for the MSCI China Index. 12-month valuation targets from 14.5 times to 12 times when they're talking about expectations. Changes in global macro environment. Yeah, I would say so. And the risk here? Risk is to the downside. Anytime you have Russia's ally, China, okay, China's ally, Russia, engaged in a war with the Ukraine. Risks to the downside, because there's always going to be a risk as long as this war is going on. And unfortunately, seems like tensions are going to be very elevated for an extended period of time. If that's the case, the risk is going to exist that China somehow aligns themselves with Russia during this period, which would cause more downside, I see, than more upside, right? That's one way to look at things. But yeah, pulling up some of these equities, man. Baba. As I said, remarkable to think about you're down 20% from where you were just trading at last Wednesday, let alone you back things up to 319, you're trading at $80. Folks, there is not a pop on this chart. I mean, talk about a well-defined channel line, right? You got the upper boundary and the lower boundary pretty much intact across the board for this channel line in Alibaba, one of the biggest, strongest companies out there for China before this slide really began. And yeah, I mean, where that line sits, you could make a case that maybe it's a little bit above that area. Maybe that's your trend line right there. If so, maybe you're coming down towards the bottom portion, man, but you do not have a bid in this equity going back to October of 2020. A year and a half, straight slide to lower prices. JD.com, there's a drop-off for you. You talk about a drop-off, man. I mean, there's probably just, from $60 to 44, folks, you lose $16. What is that? 12, almost a 30% haircut from last Wednesday. Yeah, there's better areas in this market. Let's jump around to some U.S. companies. We pull up some of the travel stocks. Boeing, taking a look. Now, Boeing, I've been talking about this trend line that it's in terms of lower prices since March of 2021, almost about a year ago, right? You look at the Fibonacci level of where we're at, from the lows of $89 to the high we had last year of $278, remarkable. We're trading at $176 right now on Boeing. Coming pretty close to that 618 of 161. We got down to a price level of 167 last week on the lows. I'm going to take that Fibonacci off for some clarity. I'm going to put it back to a daily. And yeah, you can see right at the lower portion of this channel line. Now, I've talked about it before. You'd much rather be buying something at the lower trend line of an upward channel. But you got quite a channel here on Boeing. You're trading at 176, top end about 215, and going to be interesting to see how the travel business shakes out, man. Internationally, some of these airlines, talk about getting punished. Delta comes right back down to the 618 of its full run from $17 and change all the way up to 52. We're back to $32 for Delta. American Airlines almost gives it all back to the COVID lows for America. You jump to United Airlines internationally. That one I'm just not sure I would be risking anything with the landscape right now. But domestically, you might have a little bit more possibility. JetBlue sitting right at the 618 of its full run from $6 up to 22 almost. And you take a look at Southwest as well. LUV is their symbol. Again, touches the 618. You're sitting at 40.24. You got a little bit of a bounce. You bounce on the same area you bounced in December, down from $64 early last year. You're trading at $40. At some point, travel is going to, I was going to say make money, but that's not the case because crude is a determining factor here. But I imagine at some point crude prices will ease. Maybe it takes a year or two. Okay, but our travel bug is going to last at least a year or two, folks. Okay, so taking a little bit of a longer term perspective on some of these travel stocks, another way to play that, you look for Airbnb. You talk about a pullback, man. We're down to 145 from Airbnb. You were down to 130 last week. You were as high as 210 going back to November. All right, folks, we got 3 minutes till the opening bell. Stay tuned. I'll be right back.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Chart allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open, and you got markets pulling back a bit on the open right now. You got the S&Ps. We're up 20 points, so holding on to those gains. Man, this market's moving quick. I was going to say that had the NASDAQ 100. We'll put it on a 1 minute just to see. There was some volatility for you, man. This is a 1 minute bar, folks. So this bar's been open for 38 seconds, and you just jumped up 10 points, gave it up. We're right back to 42.09 right now. NASDAQ 100. Yeah, a little bit of volatility right out of the gate, man. That's a 50-point jump in the man of a few seconds in the NASDAQ 100 as this market tries to figure out where it wants to go. You think about the type of variables, the number of variables that are so volatile right now. Geopolitical risks, obviously huge. Those impact crude prices, which in and of themselves provide so much volatility to the market. Then you have China locking down a city of 20 million, let's just call it, which has technology hubs. It has shipping hubs within it. You have Apple production already stopping over there. You have geopolitical concerns between Russia and China being ramped on top of the fact that China has the zero COVID policy, which doesn't seem to be going so well anymore with Omicron. And then you have a Fed meeting in 2 days coming down the line where they're going to begin hiking, and the market thinks they're going to hike between 6 and 7 times this year. It's already the middle of March, folks. That basically means they're coming every single meeting down the line. And you have yields in the last 7 days rising to the tune of, and we're continuing to drop right now. We did have lows of 125.05 at about 6 a.m. this morning. And again, these are 1 minute bars. Just from where we were at 9 in the morning, folks, when I started off the show, you just dropped another 5 ticks in the 10-year right now. That's pushing the yields, probably pushing 2.09% right now. We sure are. We're actually pushing 2.1%, 2.096 to be exact. Yields rise 0.4% just since last Sunday. We put things on a 10-day chart. That is quite an acceleration, folks, to the downside. Lower prices, higher yields to the tune of 4 points. We put this thing on a daily. Going back, I mean, you can see the run up and the give back over the last year. All right, but guess what? We are right back within this channel line, you could say, at least within the trend. Whoops. I'm going to add a drawing here. And I mean, you don't have to be a master technician to see a trend to lower prices. And you could say we're right back within that channel line almost. With a little bit of volatility in spades. But yeah, pretty well defined to the downside. You get a little bit outside of it on either side of the channel. But man, 125.09 yields at 2.1%. And we jump over to the VIX, a sustained level above 30 of 31.23 right now. All right, let's jump around to some of the other stocks that have action this morning. Oil. So now, we have a couple things going on here. You have Oxy and Chevron up here. Energy stocks downgraded to equal weight from overweight at Morgan Stanley. Both have outperformed peers in recent months. That's putting it lightly. Now offer less attractive relative valuations. Oxy fell 3.3% in the pre-market. You got oil down about $5 right now. Chevron's down 2.4. What you did also have, though, is that you had Berkshire Hathaway even adding to Oxy as well. Now, the story had come out that they had built quite a position in Oxy. During some of this run up, Warren Buffett probably responsible for some of this run. Maybe, I think I'm going back to maybe some of these runs. Yeah, even March 4th, coinciding in the final part of that. But nonetheless, you get Oxy up to $55 from a price level starting the year of 28. Morgan Stanley saying, hey, guess what? Even with crude prices where they are, the value of this equity just doubled. And you're not talking about a small equity, folks. You're talking about $51.5 billion at these prices for Oxy at 51.24. We jump over to Chevron. Now CVX. Yeah, much bigger company. $324 billion, but their run up, yeah, not bad. This year, coming into December, about 111. You're sitting at 166 right now. As crude gives up about $6. Just on this session alone, down to 103.38. Interesting to see how we react at about $100 if we get to that level. Seems like that's where crude is going right now. As this market gives it up a little bit, S&P's barely hanging on to the gains by 6 points right now. NASDAQ 100 sliding down 56. Let's see how Apple opens. Down 1.67% for Apple shares. Man, you talk about a give back, right? Apple basically trading at July of 2014 prices. You had a high of 150 on the dot back then. You're trading at 150, 190 after being up to 182 and change. Sometimes so remarkable how stocks ring the bell at a certain price level and then trade lower, right? All the hysteria about Apple hitting the $3 trillion price mark, they hit it for a matter of seconds. Exaggerate a little bit, but barely. 182 and change was the price level they needed. Didn't even reach 183. Makes it to 182.94. And from there, we've slid now $30 from that price level. And folks, remember, Apple, I say it all the time, but $30. Every single dollar is $16+ billion. You're talking about a third of $1 trillion just in Apple wealth lost just in the last 2.5 months. Pretty staggering prices, and the fall off has been extremely quick for Apple just in the last 11 days. Where you were trading at 168, you're down to 151 now. Apple had been holding up relatively well compared to maybe some of the other tech companies. When you look at Microsoft on 10 days ago, much further back from its highs than even Apple was at that time. But you got Microsoft near that 382. You're sitting at 281. Let's see how Tesla trades this morning. Tesla down 4.5% right now. Maybe a little bit of China concern in there if they've got some action going on in China. If you really have some big problems going on in China, that probably hitting Tesla, down 4.4%. Are we below? I'm pretty sure we're getting to levels that we're below all the hysteria that came from some of the add to the S&P 500. I think that was back here maybe, and you officially got added maybe around here. Nonetheless, quite a give back for Tesla shares. Now Tesla, let's see what we're talking about market cap wise. $786 billion market cap for Tesla shares currently. Yeah, this S&P barely holding on to the gains by 5 points now. You get the Russell giving it up as well. Russell off 8 points right now. Lockheed Martin continues to gain. They're up. They were up pre-market. Germany's going to purchase 35, up to 35 Lockheed's F-35 fighters. You jump over to Lockheed. This has been quite a run as defense spending going up worldwide. You kick off the year at 354. Things really escalate February 23rd from 387 up to 480. This morning we're up 1% at 444 for Lockheed Martin shares. Ford, so they're forecasting a 12% drop in U.S. sales this year, citing people present at a meeting with dealers. Ford has lost 100,000 units of production so far this year due to parts shortages. Just staggering the type of production misses some of these companies are dealing with here. 100,000 units of production. Ford had been on quite a tear. Don't chase, folks, man. Don't chase. Sometimes it's just remarkable the give back's possible. All the acceleration from $12 up to $25.87, and just like that, we're back to under $16. You're coming into the 786 of this run that it had that began in September. You jump over to Ford. We talk about a company valued at about $63 billion at this price level. And yeah, I imagine they do have a bright future with that new F-150 pickup truck, but it seems like people just take something and run with it, man. Yes, the Ford F-150 pickup truck was fantastic. No, it did not warrant the company trading from $12.50 to $25 in the span of 3 months, back to $15.86. Longer term for Ford, you see the type of volatility possible, folks. All we're doing right now is we're trading right back into some of the highs that we made in 2014. Stay tuned, folks. We'll be right back in 3 minutes.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We're right near the session lows right now. The S&P's barely hanging on to the green by a quarter of a point right now. You just went red, almost down to 41.85. Interesting when you look at the chart, right down to the lows that we had of Friday action. Folks, you're talking about 55 points, almost 60 points from where we were at 6 a.m. this morning. The market looks flat, but we just gave back 60 points. That's almost a percentage and a half that the market just traded lower over a period of less than 4 hours. We're used to it right now, but that is not how things normally go in a market. It is when you got a VIX sustained above 30 for an extended period of time, though. And yeah, A to B, C to D. It's a great point in the Tigers Den, folks. He's saying, you know, let us not underestimate, going back to China and Russia, the recent China-Russia pact, and, quote, friendship between the two states has no limits, end quote. There are no forbidden areas of cooperation. That's another quote. Putin and Xi rarely make statements like that, was the commentary, without meaning what they say. I agree completely, and I agree that they are maybe two peas in a pod with the same aspirations, but what I just, and maybe it's just hope, right? But I don't think that Xi needs to take on all the baggage that Putin has just taken on himself. I mean, the stories of just horrible images, of course, and they may be just as bad if China was ever going to do anything with Taiwan. But I just don't think that all of that baggage is something that Xi needs, even for the aspirations they may have. And that is just one man's opinion, putting it out there. We'll see what happens. Markets turning a little bit green, back in the green. Russell, the only one currently in the red. Let's jump around to some of the other headlines I have out here, jumping over. In the world of crypto, so this one's an interesting one. If you're not familiar, OpenSea, okay? We're all familiar potentially with non-fungible tokens, all right? Wasn't that Webster's word of the year, I think, last year? And OpenSea is where you buy these NFTs, okay? And I'm pulling up the site right now just to take a quick peek. I just literally opened this, don't have an account, never bought anything before, have no idea what these are, but these are the collections, okay? You can go out here, you can look at them. The Bored Ape Yacht Club, you ever hear of these? I think I've heard of those a couple times. And you can see what they're trading for, okay? And what they're available for, etc. Let's click on this one and see where we go here. So that one's trading at $154 right now, and I believe that's trading at 0.06 Ethereum. Ethereum is what they use in OpenSea, okay? Now, what's interesting is just how quickly this landscape is changing. So this article talks about, this is, I believe, a Bloomberg article that I was reading this morning. Found it on Yahoo Finance again. But Sequoia Capital talking about a weakness in OpenSea's NFT dominance. And what they talk about here, now check this out though. It has 43% of the market. This is OpenSea, $23.3 billion in total sales, okay? But they have a weakness potentially, and that's that they operate off Ethereum. And Solana is out there, and Solana is able to, able Let me read this to get the full shape of things. The point of this article is how quickly things are changing here. Okay? You have OpenSea that's valued at like $13 billion or something like that. And Sequoia is saying, hey, there's a chance they aren't even the main player out there. If they're investing in Magic Eden, okay? Magic Eden is started by another crypto-focused VC firm. You have a Coinbase founder, a Sequoia partner in there. They also back OpenSea. So they're spreading their wealth, spreading their bets, you should say, across the board. But that uses Solana. Now, NFT sales reached $2.9 billion in February. Okay? Yes. Trading volumes on OpenSea, this is the part I want to get, have been cut in half over the past month. Could you imagine if Charles Schwab, TD Ameritrade, came out and said trading volumes got cut in half over the last month? I mean, it's kind of what's been happening with Robinhood a little bit since the boom. Robinhood's trading at $10. You were at 85 in the beginning of the IPO. They are not going to be around forever if they're making all their money off Dogecoin trading, which is what they were on some of the quarters that they had earnings for, okay? It's interesting when you see this because the spectrum is still so wide open here. OpenSea, even I have heard of, that they are the biggest player in buying and selling crypto. But interesting when you see that things may shake out so differently. And what they're saying here is that Magic Eden uses Solana, so it's faster. They use, let me get the exact. Solana is capable of facilitating many more transactions at once at a much cheaper cost. And all they're saying is if Magic Eden can get a hold in that area of buying and selling NFTs before OpenSea makes that change. It's almost like guaranteed that they think OpenSea is going to make that change. What does that mean for Ethereum? I don't understand the fundamentals well enough, man, but if I was a huge Ethereum bull, and many times I have looked at Ethereum as being a huge bull, reading articles like this makes me be a little bit cautious of ever thinking I'm ever smarter than anybody in especially the NFT sector. Because if you see something like OpenSea, folks, jump immediately to a Solana, you're going to see Ethereum crash hardcore in a big way. So far, NFT owners haven't bought in on the promise to Solana. Magic Eden dominates NFT trade on that blockchain, but it's only the ninth largest NFT marketplace overall. It's mainly right now used for decentralized finance, but the advantages over Ethereum will play well in a medium like video games, where NFTs are likely to be traded frequently. Gaming NFTs will be on places like Solana. They're not going to be on Ethereum. So it'll be interesting to see how that all plays out. But big money coming into there in a big way. And I think they talked about OpenSea. Yeah, $13 billion it got from investors in January. Yeah, that's the valuation that OpenSea got. Now, Magic Eden, they have not put a valuation on that. They didn't disclose it, but they just got $27 million in funding. But OpenSea, a $13 billion valuation, and their trading volume got cut in half. Pretty remarkable, man. The wild, wild west, indeed, of crypto. All right, what else we got going on? Let's jump around to some of the stocks as we get some volatility back to the upside. We'll check out Apple shares on that China slide, popping a little bit on the open, looks like. Yeah, from 150.106 to 150.287 for Apple. Let's check out some of those Chinese stocks as the market opens. Looks like somebody's trying to find a buy at the bottom there. You got Alibaba catching a bid. It's up $4 from where you open right now to 81.41. I mean, it's tempting, folks. I get it. Diddy down to $1.95 from $18 when they went public less than a year ago. We jumped to JD. JD catching a little bit of a pop, still down 7% though, but it seems like somebody is trying to buy, catch that falling knife from 42 to 44 for some of those Chinese stocks out there. Let's jump to some of our tech stocks with Microsoft shares up 1% right now. We jump over to Google shares, basically flat. And we'll jump to Tesla. Ooh, look at that pop on Tesla. Just popped $30 in the span of a heartbeat. Tesla almost back to flat after being lower. Yeah, they're buying some of these Chinese equities right now. Can't blame them for the run that they've had, but man, you better have quick fingers if you're buying Chinese equities. Would not want to be the one risking anything coming out geopolitically. Even if I think tensions won't rise, Risk reward wise, I've stated, I think you got risk to the downside there if China ever does align themselves with Russia. Stay tuned, folks. We'll be right back. Finish up the show.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value, buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We have the S&P's up 15 right now. You get the Dow up 192, and it was a big weekend of news in the sports world as well, especially for New England and for Tampa fans, as Tom Brady. Pretty remarkable, folks, that he is back. I was saying last night, it'd be pretty amazing if this is how he actually game planned it out, right? What better way to create some great PR, all the hype machine you could want if you retire and then come back? Don't think that's what he did, but nonetheless, you can't write that one, man. Last night, he just decides to post. Guess what? He's coming back. These past 2 months, I've realized my place is still on the field, not in the stands. Brady, I believe he's 44 years old, I believe it is. Let's see. I think this article had it. I mean, it's staggering, folks. Yes, the 44-year-old Brady, and can't blame him. You thought he was going to go out on top, did not win the championship, but he led the NFL, folks, in passing yards, touchdowns, completions, and attempts last year. I mean, yeah, Aaron Rodgers had quite a year as well. He won the MVP. In many other years, if you're the quarterback that leads in passing, touchdowns, completions, attempts, and you have a great team like Tampa that makes it almost all the way to the Super Bowl, you're usually going to get the MVP on that. So he can obviously compete. Pretty interesting to see how that's going to come up in the coming year and see how it shakes out. Now, back to the world of finance. Good luck to the person who bought Brady's final quote-unquote touchdown pass just yesterday for $518,000. They auctioned the ball off. It is the final touchdown pass of last year, because now it's just the most recent football that he's thrown for a touchdown, and I imagine he'll have some more touchdowns at least this coming year when he plays. Point buyer beware, folks. Would not have been spending over $500,000 on that unless I was certain that was going to be the last one. That was a risk. It was a quantifiable risk. Hopefully they realized that when they spent over $500,000 for something that now is just one of many touchdowns for Mr. Brady. Pretty remarkable on that one. Would not want to be in the room when the person got that call that Brady, literally within hours of that auction closing, unretired. All right, folks, we got the NASDAQ 100 back to flat. We got volatility in spades this morning. We got the 10-year yield rising towards 2.1%. And we got live shows all day, folks. We got our man Basil's up next. We got our man Larry at 11. Steve Rhodes at 1. Dave White at 2. And I believe we got a guest host, but we're going to be live. Retail. Basil's up next.